Now, just to give you some background on how you actually get this pre-approval, there are two ratios that your bank uses. They're called TDS, which stands for total debt service, and then you have GDS, which stands for gross debt service. Now, the difference between these is pretty straightforward, pretty simple, and the easiest way to put it is the TDS is basically your gross debt service, so gross income, whatever the amount you get in income pre-tax, plus some. So you add things on top of that, and that will give you your total debt service. Now, typically you don't want these numbers to be high, of course, logically. But the number we want to look at will be total debt service, because at your total debt service, we can actually tell whether or not you can afford the home and the lifestyle. Now, the bank doesn't care, right? And at the end of the day, like I mentioned, they want to give you the maximum amount of possible. So what they will look at usually is your gross debt service, because that indicates the maximum amount of money they can give you so that they can get the maximum amount of return from you.